Well, hello and welcome to Business 360. I'm Ashmit Kumar, and here are the headlines that we're tracking this evening. The markets snapped their four-day losing streak to start the week on a positive note. Nifty reclaims the 18,000 mark as all sectoral indices trade in the green except Nifty Pharma. The sensex gained 721 points. The rupee ends stronger than Friday. CBI arrests Videocon Group promoter Venugopal Dhoot on charges of cheating and criminal conspiracy in the ICICI Bank loan case. Sources tell CNBC-TV18 that Dhoot had offered to turn an approver in this case. Former ICICI Bank MD and CEO Chanda Kochar and her husband Deepak Kochar are already in CBI custody. Jet Airways sees exits amongst its ranks as clouds of uncertainty hover over the airline's relaunch. While CEO and CFO continue to remain on reduced pay, senior management staff, pilots, cabin crew quit and join other airlines. That's an exclusive. Private equity investor Advent is set to acquire control of Suven Pharma from selling the promoters who see this as a succession move. The 6,300 crore rupee deal opens up the possibility of Suven's merger with Cohance and triggers an open offer to existing shareholders. Health Minister Mansukh Mandavia meets Indian Medical Association officials to take stock of the COVID situation. Active cases in the country hover around the 3,400 mark with less than 200 new cases and 0 deaths reported in the last 24 hours. The centre has mandated RT-PCR tests for all passengers from China, Japan, South Korea, Hong Kong, Thailand. 2% of other international passengers to undergo random RT-PCR testing. The government looks to reap fiscal positives as it allows the PM Kisan Anna Yojana to sunset. Sources tell CNBC-TV18 that the additional annual cost for distributing free food grains under the Food Security Act is hardly 0.1% of the GDP. This additional 20,000 to 25,000 crore rupees is already included in the 2 lakh crore rupee food subsidy estimate for calendar year 2023. Cold wave grips large parts of northern India, with the mercury dipping considerably in Delhi, Punjab, Uttar Pradesh, Haryana and Rajasthan. The Met Department says that cold wave conditions will prevail over the next 2 days and then abate. Well, to begin with the day's trading action for now, the Lal Street saw a strong bounce to snap its four-day losing streak. Nifty and Sensex gained over 1%, with Nifty reclaiming that 18,000 mark. Financials and mid-caps outperformed. All sectoral indices ended in the red except for Pharma. Prashant Nair is joining us now with all the day's market action. Prashant.
Very decent bounce coming in the market today. The Nifty on Friday lost 300 points. It gained back 200 of those points by close. It would have been even better, but in the last 30-40 minutes or so, the market gave back, on the Nifty, it gave back 80 points and, proportionately on the banks as well. But after 2 days of gut-wrenching kind of sell-offs, this is a good outcome that we've had today. Some stability coming back as we enter the last week of 2022. Broader markets also, which sold off very aggressively, came back forcefully. Decent kind of gain, 60-70% of Friday's losses recouped today. And banks, PSU banks, especially the public sector bank index from the December 14th high had lost 14%. In a single day today, it gained 7%. That was big. The private bank index did well. Metals as a space was up about 2% or so. Some nifty gainers on your screen: Indocent, SBI, Hindalco and more. In the broader markets, advance decline was extremely strong, some 7 advances for every stock which was down. The gainers from the PSU bank space, the private financial space, Yes Bank, Poonawalla, J&K, defense names, especially Mazgaon, Garden Reach, Cochin Shipyard, Bharat Dynamics, and so on and so forth. It's a good comeback after 2 days of ferocious selling. Let's see if we can hold this. Very little by way of global cues, mind you. US markets are shut today. Later, so we come back with very thin global cues, but it's going to remain like that at least for the next fortnight or so. 18,050, which is very nearby, remains something to watch out for. The market starts to trade above that. We can aim and hope for higher levels, but that's the first one. The market needs to keep its head above. Back to you.
Right, Prashant, thanks a lot for that update. Now, private equity firm Advent is set to acquire controlling stake in Suven Pharma from selling promoters who see this as a succession move. The deal allows Advent to explore the merger of its portfolio Cohance with Suven Pharma. Ekta Batra joins us now with more details. Ekta, take us through the contours of this deal.
Thanks for that. Well, yes, the big news is that Advent has entered into a share purchase agreement and they will be acquiring 50.1% stake in Suven Pharma for around 495 rupees per share, which turns out to be a deal size of around 6,300 odd crores. Now, the mode of payment for this particular acquisition is going to be cash. Now, the promoter group will continue to hold around 9.9% stake in the company after the deal. Advent will also launch an open offer. If it goes through entirely, they will hold 76% stake in the company. Reason for the stake sale is because the company has indicated they were unable to bring a proper succession plan in place. Venkat Justi's role post the deal, they're likely to stay on for a period of time. Suven Life, remember that's the R&D arm of Suven. They have no plans to fund Suven Life as of now, which is basically from the Suven Pharma funds. Suven Life, in fact, raised around 400 crores from the rights issue, and hence the company is well funded for 2 years. That's what Mr. Venkat Justi has indicated. Now, Advent's plans post the acquisition, they intend to explore a merger of its portfolio company Cohance Life with Suven. Aim will be to build basically a leading end-to-end CDMO as well as merchant API player. They will focus on servicing the pharma as well as the specialty chemical markets. Now, we did speak to Advent. A couple of key points is that Cohance's first half FY23 revenue is tracking similarly to what FY22 was, of around 1,300 odd crores, 28% margins. Combined margins would be around 30 odd %, and as of now, they're not considering delisting at this point.
Right, Ekta, thanks a lot for that. Now, the government looks to reap fiscal savings as it allowed the PM Kisan Anna Yojana to sunset. Sources tell us that the additional annual cost for distributing free food grains under the Food Security Act is hardly 0.1% of the GDP. Sapna gets us more. Sapna.
After 28 months since the scheme first started, the cabinet has finally decided to allow PMGKY to sunset. Instead, the government will provide free food grains under the PDS from Jan 1. Even the highly subsidized rates of 3 rupees per kilo for rice and 2 rupees per kilo for wheat under PDS will be waived. Government estimates a total food subsidy at 2 lakh crore for 1 full year from Jan to December in 2023. Essentially, the quantum of food grains available for the poor will now come down. Till December 31, grains under the Food Security Act and the Garib Kalyan Ann Yojana will be available. Both put together, this is a massive average of 50 kilo of rice and wheat per month per family. But from Jan 1, only the normal PDS allocation of an average 30 kilos per family per month will be available, free of cost. The closure of PMGKY will be a significant fiscal positive for the government. Sources tell CNBC-TV18 the additional annual cost to the government for distributing food grains free of charge under the NFSA is likely to be only around 20 to 20,000 crores, hardly 0.1% of the GDP. Importantly, this additional cost is already factored in the 2 lakh crore estimate for calendar 2023. In comparison, the additional cost of PMGKY this fiscal is estimated at 1.20 lakh crore, over 1% of the GDP. 60,000 crores of this additional liability has been provided in the supplementary demands for grants, while the balance 60,000 crores is likely to come through in the revised estimates of the budget on Feb 1. Just how costly PMGKY has proved is evident from the galloping food subsidy. Before COVID hit India, the food subsidy was penciled at 1.15 lakh crore for FY21. Post-COVID and PMGKY, it rose by a massive 148% in FY22, and this fiscal will touch a record high of 3.20 lakh crore only on account of PMGKY extensions. We can thus conclude, with the COVID-led deaths and economic hardship receding, the government did not want the fist to hemorrhage any further, and so it carved out a safe passage by allowing food grains completely free under the time-tested PDS, while allowing the Garib Kalyan Ann Yojana to sunset.
Right, Sapna, thanks a lot for that. Let's shift our focus to one issue that's brewing between the judiciary and the executive. The government and senior members of the judiciary have been embroiled in a rather acrimonious stalemate for some time now, with the Law Minister Kiren Rijiju, who has criticized the judiciary for taking long vacations despite high number of pending cases, calling the move not very convenient for justice seekers. The CJI, meanwhile, has refused to relent. Justice Chandrachud Chief Justice said that the Supreme Court will not have a vacation bench for the winter break. Now, importantly, this brings us to a Law Commission report dating back to 2010, which had adopted the recommendations of Justice A.K. Ganguly, then a judge of the Supreme Court. Justice Ganguly had suggested curtailing vacations of higher judiciary by at least 10 to 15 days and extend court working hours by at least half an hour to manage the workload. Now, we have with us the man himself, Justice Ganguly. Justice Ganguly, a very good afternoon. Thank you so much for joining us here on CNBC-TV18. Let me first take you through the 2022 calendar for the Supreme Court, the top court, the apex court. Just a simple reading of the calendar shows that of the 365 days, the court is on vacation on 177 days, which is nearly half of the year. There were petitions filed in the Bombay High Court which said that this is, in fact, a violation of our fundamental right to getting judicial access, that this is, in fact, benefiting only a very small elite group of jurists. What would your take be on this entire debate, and with now even the law minister saying that perhaps the vacations are a bit too much?
Well, vacations and courts, these are very vexed issues. Well, you must understand how severely hardworking the judges are. I mean, the Indian judiciary is the most hardworking judiciary in the world. You must understand that the judges not only work during the court hours in order to deal with the heavy schedule of work. The judges have to work beyond court hours. Even in the morning before coming to court and in the evening after returning from court duties, they have to burn the midnight oil, to read the papers, to prepare judgments. So when the court is open, it is not only the judges' working hours, is not only confined to the court hours, that is from 10 o'clock or 10:30 to 4:30. It is much beyond that. Therefore, the judges legitimately need some vacation. But as you rightly said in my recommendation, I had no power to recommend, but I wrote an article in which I suggested that the court vacation should be curtailed and the court working hours should start. We should start at 10 o'clock every day instead of 10:30. 10:30 has no meaning. You see, everywhere the schools, the offices, they all start much earlier. And the first part of the day must be properly utilized. The court should start at 10, it should continue till 1. There should be a meaningful break for 1 hour. Then it should start again from 2 and should continue till 5. If you do that, then every day we are extending the working hour by almost 1 hour, which is substantial. And what I have suggested in my article is that the period during which the court is working, that should be controlled in the sense that the adjournments, the very well-known system of adjourning cases, that should be very strictly regulated. A civil procedure code has already stated. You see, if you look at civil procedure code, that is already stated under Order 17 that an adjournment cannot be just granted just for the asking. This adjournment should be controlled. But unfortunately, without the proper assistance of the bar, this is not possible. See, in many cases, you find
important points that you've made there. As a part of the recommendations also that you forwarded to the Law Commission, they in fact adopted your suggestions there in their report, in the 230th report of the Law Commission. However, just from a layman's perspective, the concern that often emerges is that there are various disciplines in the country, professional disciplines, which dedicate a lot of time for which take a mental, physical toll on one. But this is one profession where there is a summer break that extends for as long as 7 weeks. There's a winter break that extends for 2 weeks. Then there are Holi break, Diwali, Dussehra break as well. The concern that has emerged from Mr. Rijiju's comments is that is there room for perhaps debate and discussion on reducing the leaves at play? We're talking about Supreme Court working only for, or leaves accounting for 177 days out of 365. You yourself had suggested reducing it. Is there scope for that discussion, for reducing the summer break?
Yes, certainly, because the summer break, which is for such a long period, that should be reduced. Of course, during summer break, the Supreme Court functions. It functions during the holidays also. There are holiday benches where regular matters are taken up for hearing. But a regular court should be there, because the holidays for 7 weeks, I mean, should not be encouraged in the context of the large pendency. You see, in other countries, the court doesn't work for more number of days. But there, the pendency is not so much. The judge population ratio in India is extremely poor, apart from the vacancies which are already there, which cannot get filled up for various reasons. The sanctioned vacancy in India of judges is not, that is not filled. That's very important.
Indeed.
The judge population
That's
ratio
an interesting
in India
point that you point out in terms of...
extremely poor, extremely. You see, in my view...
Sure, Justice Ganguly, that's a very relevant point. Yes, Justice Ganguly, that's a very relevant point that you've made in terms of the judge per population gap. And that is, in fact, a point that has emerged in very recent cases and hearings that we've seen before the top court on judicial appointments. That is where we've seen, for lack of a better word, a very ugly exchange between the government on one hand and the apex court on the other, where both sides are trying to pin the blame on the other. What do you make of this public debate that is now spewing out into the public domain via social media and via newspapers and publications, which in fact reflect kind of a breakdown between the two sides?
See, both sides should consider their duties more seriously, if I may say so. The judiciary should be like an open book in an open society. Everything should be marked by accountability and transparency. You see, if you permit me, I shall quote from a few lines of what was written by Harold Lasky. If you permit me, the lines are so pertinent. Lasky wrote centuries ago, obviously, therefore, the men who are to make justice in the courts, the way in which they are to perform their function, the methods by which they are to be chosen, the terms upon which they shall hold power, these and their related problems lie at the heart of the political philosophy. When we know how a nation state dispenses justice, we know with some exactness the moral character to which it can pertain. So these are very serious issues. Neither side can afford to be simple. You see, the appointment of judges and the performance of the judges, these are issues which should be transparent, accountable, and must be marked by the principles of judicial independence. The present system of appointment of judges is the best system available. Because we have found when the power was in the hands of the executive, what happened? Eminent judges like Justice Khanna, Justice Hegde were superseded only because of one reason, that their judgments were not to the liking of the executive government at the time in power. We do not want that thing to be repeated. At the same time, the judicial appointment in the hands of the collegium system presently functioning is not satisfactory either. On many occasions we have found, because of nepotism was taking place, there are various approaches where best person has best talent has not been chosen. So a compromise has to be made. But
Justice Ganguly, we're running out of time. I'll just ask you one last question, Justice Ganguly. We're completely out of time, but I'll ask you one more question. And I'll just quote a few statistics here. Ever since Chief Justice Justice Chandrachud took over, the number of cases filed, 5,898. Number of cases decided, 6,844. And this is on account of a certain sense of discipline that Justice Chandrachud is trying to bring into the apex court. Is this the way forward? Do we already have a model that works within the framework, within the four walls of the infrastructural constraints that we have?
Justice Chandrachud, prior to him, Chief Justice Lalit, They have all tried to form certain system, certain discipline, which has worked very, very effectively in knocking down the area. That should be followed and should be followed by all courts, even the district courts.
Right, so I think we have some difficulty there technically in connecting with Justice Ganguly, but the point that, of course, that he was trying to make twofold. Number one, the dispute that has broken out between the Supreme Court on one hand and the APEC and the government in terms of judicial appointments is something that should best be reserved to the wisdom of the collegium. And on the issue of vacations itself, pointing out that there is certainly room for debate on reducing the number of vacation that the court is on. Again, just to give our viewers the statistics there, 2022, the court was on leave on 177 days. But that's all the time that we have for. I'd like to extend our gratitude to Justice Ganguly for joining us and for sharing his insights on the matter. We couldn't carry on that conversation due to some concerns, technical concerns. We'll, of course, hope to connect with him soon on the subject. But with that, it's time now to slip into a very short break. But coming up on the other side, Jet Airways sees exits. Welcome back. You're watching Business 360. Now, India saw 190 new COVID infections, with active cases marginally increasing to a little over 3,400 cases in the last 24 hours. No deaths, importantly, have been reported. Meanwhile, the insurance regulator has reached out to the insurers on their COVID preparedness. The discussion is, however, only advisory in nature. Yash Jain now joins us with more details. Yash, tell us, what are you picking up?
Well, that's correct, Ashmit. So just last week, towards the end of last week, the insurance regulators reached out to both life, general and standalone health insurance companies, putting an advisory sort of a notice to all these insurance companies, essentially just to keep a check on the preparedness if in an eventuality that the COVID cases in the country rise. As far as life insurance companies are concerned, the insurance regulator IRDAI has asked these life insurance companies to have an assessment of the capital that they have, the reserves that they've been keeping. This is essentially to understand that if claims rise for whatever reason going ahead, they do have enough capital to essentially handle those claims. To general insurance, the insurance regulators ask them to keep their hospital networks on standby in case health insurance claims increase. Also, to essentially focus on cashless claims as far as these patients are concerned. Same goes for health insurance companies, but very important, as you mentioned, this is just an advisory. There is nothing that the regulator is forcing on or anything of that sort, but just an advisory to all these insurance companies.
Right, Yash. Thanks a lot for that update. Here's a CNBC-TV18 exclusive. As the relaunch of Jet Airways continues to remain uncertain, we learned from sources that Jalan Calroc Consortium is having to say goodbye to some senior and mid-senior level employees, along with pilots and cabin crew. Madhiya Mujawar now joins us with more. Madhiya, tell us, what are you picking up?
Well, many factors at play here that explain why Jet Airways is seeing departure of employees even before the much talked about relaunch. Let me first begin with what sources have told CNBC-TV18. Among the top exits, the Vice President of Engineering and the Vice President of Human Resources have exited Jet Airways. Besides other senior management, the Chief Executive Officer and Chief Financial Officer are working on slashed salaries. The Vice President of In-Flight Services has been sent on leave without pay. The company had kept pilots and cabin crew on standby for the relaunch, but we learned that many of these pilots and cabin crew have quit to join other airlines. Now, these were employees from the core team. Now, ever since the Jalan Calroc Consortium implemented the cost-cutting measures, some staff at the managerial and junior level who were either given pay cuts or sent on leave without pay have also quit the company. Sources tell us some mid-senior level employees currently working with Jet at a reduced salary or no pay at all are in the process of joining other airlines. Let me tell you, these developments are not surprising given the standoff between the Jalan Calroc Consortium and the lenders over the transfer of airlines ownership. Matters even got more complicated after the NCLAT order that directed the consortium to make additional payments for PF and gratuity of employees. So with payments not made, ownership not transferred, and employees losing patience, the future of Jet Airways 2.0 remains quite uncertain.
Right, Madhya, thanks a lot for that update on Jet Airways. But that's all the time that we have for. It's a wrap on this edition of Business 360. Thanks so much for watching. Stay tuned to CNBC TV18. The news and updates continue on the other side.